The S&P 500 is the gold standard in the investing world. Getting added to the S&P 500 is like having a blue check mark on Instagram. How you stack up against the S&P determines how good of an investor you are. The majority of people cannot beat an S&P 500 index fund. In fact, Warren Buffett actually made a bet with Ted Siedes, who is a former co-manager of Protégé Partners, and this bet lasted over 10 years. And on one side we had the S&P 500, and on the other hand, specific hedge funds picked by Ted Siedes. The parties were betting $500,000 each, which quickly grew to about $2 million in the pot by the time the bet was done, due to some of it being in stock.
Wow!
Now, why is this important, and what does this have to do with our precious SoFi? If SoFi can one day make it into the S&P 500, it will make it so that all mutual funds / ETFs that track the S&P 500 index will be forced to buy shares of SoFi, not just once, but consistently over time. Obviously, this will add a significant amount of buying pressure and ultimately send SoFi's stock price flying past the moon into a different galaxy.
High this week of $900. Now, at its peak, if you had invested $1,000 a year,
In a recent video, we went over how Vanguard recently started purchasing shares of SoFi in its index funds. In this video, we will look at what it would take for SoFi to get added to the index of all indexes. Considering how many ETFs and mutual funds track the S&P 500, this would be game-changing for the stock price. Spoiler alert, it's actually much closer to getting added than you might think. Welcome to Wealth Gambit. On this channel, we cover all things stocks, from stock news to fundamental analysis. Although we do like to see everyone making a lot of money, we're not financial advisors, so please always do your own due diligence. We just recently made social media pages, so be sure to follow us there for more stock news, market updates, and most of all, some dank financial memes. Now let's get right into it and see if SoFi has what it takes to get added into the S&P 500 index. Starting off with the basics, S&P Means Standard & Poor's 500. It was first launched in 1957. The 500 represents the number of companies in the index. Now this is where it gets a little confusing. Technically, you can't actually invest in the S&P 500 index itself, only in funds / ETFs that track the S&P 500 index. That's why there's multiple S&P 500 ETFs / index funds, but only one S&P 500 index. Let's hear it from David Blitzer, Managing Director and Chairman of the Index Committee at S&P Dow Jones Indices.
Clearly, the index is the basis of numerous investment products, ETFs, mutual funds, things like that. But you cannot invest directly in an index. What you can invest in is an ETF or mutual fund that tracks the index, that's designed to have returns that are very close to the ones we calculate for the S&P 500. Or you may invest in futures or options tied to the index that will let you hedge your position or speculate on the markets.
The holdings in every index may be based on market capitalization, revenue, float, or even fundamentals of a company. In the case of the S&P index, 500 companies listed in a public stock exchange like NYSE, NASDAQ, or CBOE are considered ones with a huge market capitalization. Investors like us may use this index to know how much is changing in the market. 11 industrial sectors are covered in this index. According to sources, the S&P 500 represents about 80% of all US stocks value. And since its inception, the index has been realizing annualized returns of about 10 to 11% per year. Considering that inflation in the US is about 2% per year, that's a net return of around 8 to 9% per year. No wonder why they say the rich keep getting richer. Now, for the juicy part. What does it actually take to be added into the S&P 500? There are certain requirements before a company is included into the S&P 500 index, at least according to the S&P's official website. First and foremost, a company should be a US company. There we go, check for SoFi. Second, it should have a market capitalization of at least $13.1 billion or higher. And since the fintech space / market in general has taken a major hit in the last couple of days, SoFi is currently sitting at just under $13.1 billion at $12.68 billion market cap. Typically though, it usually hovers at around $14 to $16 billion, so for the time being, no check for this.
Hello, I like money.
Third, a company should have a public float of at least 10% of its outstanding shares. Check again for SoFi. Fourth, its most recent quarter's earnings and the sum of its trailing 4 consecutive quarters' earnings must be positive. Although SoFi's net income is not yet positive, the trajectory does appear to be heading that way. Take a look for yourself. Fifth, a company must have traded for 6 to 12 months after its initial public offering. Now let's take a look at where SoFi is right now. SoFi is a fintech company based in the United States, so that's one check. SoFi has around 614.49 million shares out of its 799.63 million shares available for trading.
Nice.
Which represents way more than 10% of SoFi's outstanding shares being public float. That gives a second check for SoFi. At the time of recording this, SoFi has a $12.68 billion market cap, which is just under the requirement. Typically, SoFi does on average trade above a $13 billion market cap, but no check for now. SoFi went public last June 1st, 2021, and has been trading for almost 6 months now. Still not within the required must-have traded 6 to 12 months time period after IPO, but SoFi will of course get there with time. So now to tally up the score. Of the 5 major requirements, SoFi has 2 of the 5. But in about 8 to 12 months time, assuming the market hasn't crashed, SoFi should actually pass the must-have traded 6 to 12 months after IPO, bringing it to 3 of 5. Next, at the time of recording this, the market just so happens to be dipping. SoFi typically trades at over $13.1 billion market cap, so assuming the market is not crashing, there goes another check, and that would be 4 out of 5. Lastly, the company's most recent quarterly earnings and the sum of its most recent 4 consecutive quarters of earnings must be positive. According to analyst expectations, this should occur sometime in 2023. As you can see, ladies and gents, SoFi is really close to meeting all the requirements to be added into the holy grail of indexes, the S&P 500, and should meet the last and final requirement maybe sometime towards the end of 2023. For those of you that are short-term, that may seem like a long time. For those Sophian soldiers that are long-term, that just gives us way more time to load the boats. I hope you guys enjoyed this video. If you did, please smash that like and subscribe button for the YouTube algorithm, as it helps the channel out a lot. Also, don't forget to subscribe if you want to see more videos like this. That wraps it up for today's video, guys. Do you think SoFi has a shot of getting added into the S&P 500? Comment "buy the dip, loser" if you've been holding the line and adding shares. Anyways, until next time, peace.